The S&P 500 just hit another all-time high. Investors are celebrating, and almost none of them realize they might be staring at the single biggest illusion in modern finance. Because behind those record numbers, something deeply strange is happening. Money is actually fleeing American markets. Today we'll show you the one chart that exposes the trap and whether it's about to snap shut. Chapter 1. The divergence. Let's start with a chart that, frankly, shouldn't exist. Here's the US stock market, plotted against something called the Economic Policy Uncertainty Index. Since late 2024, these two moved almost in lockstep. When uncertainty rose, stocks fell. When uncertainty fell, stocks rose. Perfectly logical. But lately, a huge gap has opened up between them. US economic uncertainty is now sitting near the highest level in 40 years of data. And yet the stock market has, against all odds, kept climbing to record high after record high. At first glance, it looks like investors have simply stopped caring about risk. That they're shrugging off every geopolitical and economic threat in front of them. But that could not be further from the truth. Because if you stop watching the headlines and start following the actual money, it's quietly running for the exits. Chapter 2. The Great Escape. Here's what almost nobody is talking about. Even as stocks print record highs, capital is stampeding out of US assets. The US Treasury bond market has fallen 15% since late 2024. Roughly $300 billion in value. Gone. The US dollar index is down 10% over that same stretch. And in just the last month, $50 billion left US money market funds. The single biggest monthly outflow in over a decade. This is not what a calm, confident market looks like under the hood. It's an exodus, which leaves us with a genuine paradox. If investors are pulling their money out this aggressively, why on earth is the stock market still going up? The answer isn't in the market at all. It's hiding in your wallet. Chapter 3. The dollar trick. The key is the purchasing power of the US dollar. Now, the dollar has been slowly losing value for 35 years. That part is nothing new. But watch what's happened recently. Since 2021, that decline has accelerated far beyond its historical trend. The dollar is now losing purchasing power faster than at any other point in 35 years of data. That's exactly when inflation came roaring back. And while the headlines keep telling you inflation has cooled, the truth is it's still running well above its long-term average. In fact, it's climbed back from 2.4% to 4.2% just since the start of 2026. Here's why that matters. When the ruler you're measuring with is shrinking, everything priced in dollars, including stocks, looks like it's going up, even if its real value hasn't changed at all. A rising market inside a falling currency is, at least partly, a mirage. And there is one chart that strips that mirage away completely. Chapter 4. The real chart. This is the one. Take corporate profits and remove the help from the falling dollar. Adjust them for inflation, so you're seeing real earnings, not just bigger dollar signs. Historically, real corporate profits grow over time. But since 2021, they've been almost completely flat. Now lay the S&P 500 on the same chart over that exact same period, posting record high after record high. A gap opens up, a chasm between what stocks are doing and what companies are actually earning in real terms. That gap, right there, is the illusion. A huge share of the market's gains aren't coming from businesses getting more profitable, they're coming from the dollar getting weaker. And gaps this wide have a very nasty habit of closing. Chapter 5. 2001, all over again. We have seen this exact movie before. Back in 2001, the stock market had drifted so far from what corporate profits were actually doing that, eventually, gravity won. The S&P snapped violently back down to reality, the dot-com crash. So the only real question left is this. How wide does today's gap get before it closes, and what closes it? Since this gap is being driven mostly by the dollar's devaluation, That's the first domino to watch. And right now, inflation has just started ticking back up, with the dollar's purchasing power accelerating downward again. Which AU, strangely might mean this party isn't quite over yet. Chapter 6. The Melt-Up Setup. Here's the twist that catches almost everyone off guard. In the short term, all of this is fuel. A dollar losing value is a tailwind for anything priced in dollars AU, and that includes the S&P 500. The market can keep melting upward as long as one thing holds. Corporate profits have to stay stable, and right now, they probably will because profits only really collapse during recessions. So look at real GDP growth. It's still firmly positive, sitting in that healthy 2 to 4% range, and it actually ticked back up last quarter. The exact opposite of what you'd see heading into a recession. So you've got a weakening dollar pushing prices higher and an economy that simply isn't rolling over. That is a perfect storm for a melt-up. But here's the catch, a melt-up and a trap are the same thing, right up until the music stops. So here's the mental model to walk away with. That record high stock market isn't simply fake AU, but it is not what it looks like either. Strip away the falling dollar, and the real engine AU corporate profits has been idling since 2021. For now, a weak dollar plus a stable economy can keep pushing nominal prices higher. That's the melt-up, and you can ride it. But the trap springs the day corporate profits actually start to contract AU, because then no amount of dollar weakness can hold the index up. That's precisely what happened in 2001. So do yourself a favor. Stop staring at the headline number on the S&P. Watch real inflation-adjusted profits and watch GDP growth. Those two will tell you whether you're enjoying a melt-up or standing on a trapdoor. If this changed the way you see those record highs, hit subscribe. It genuinely helps the channel more than you'd think. Next time, we'll break down the single indicator that has flashed before nearly every major market top in history. We'll see you then.